If you've been watching the Toronto real estate market, March gave us a bit of a mixed signal. On one hand, sales were up, and on the other hand, listings were down. Prices are still lower than last year, but the market is starting to tighten. And at the same time, buyers are still showing some uncertainty, which makes sense, considering everything going on in the world right now. From geopolitical tensions to rising gas prices, overall cost of living pressure. So in this video, I want to break down what the March TREB numbers are actually telling us, what's happening by property type, and what this could mean for the market moving forward. So let's talk about the headline numbers. In March 2026, GTA home sales came in at 5,039, which is up 1.7% compared to March last year. At the same time, new listings dropped compared to last year, 16.7%. Active listings were also down 8% year over year. So what that tells us is pretty simple. There's less inventory coming to the market. Buyers are starting to come back, even if only gradually. And that's usually the type of setup that can start putting pressure on the prices. But despite that tightening, prices are still down compared to last year. Average selling price in March was just over $1 million, which is down 6.7% year over year. What's also interesting is how long homes are taking to sell. Average days on market increased to 31 days, up from 24 days last year. So even though supply is shrinking, buyers are still taking their time. They're negotiating harder, they're more selective, they're not rushing into the way we saw in the spring markets. And honestly, a big part of it comes down to confidence. A lot of buyers are still uncertain right now. We've got rising gas prices, global instability, trade concerns, just a general feeling that the world is unpredictable. And when people feel that way, they don't always respond to lower prices by jumping into the market right away. Instead, they wait, they hesitate, and they second guess whether it's the right time to take on a large mortgage or make that move. So even though affordability has improved compared to last year, buyer psychology is still holding the market back a little bit. Now let's get more specific, because the breakdown in home types is actually really interesting. Detached homes saw the strongest overall sales activity with 2,235 sales in March, and the average detached price for GTA was just over 1.3 million, which is down 6.4% year over year. Semis, we saw homes had 442 sales, and this was actually one of the weaker categories. Sales were down 6.9%, and the average price down 9.5% year over year. Townhomes had 876 sales, with price averaging around 850, also down 6.4%. Townhome sales were down slightly overall, but this category still matters because it sits right in that missing middle range between condos and detached homes. And then you've got the condo apartments, which had 1,422 sales with the average price of around 620. The condo sales were actually up 1.7% year over year, but prices were down the most among major categories, down 9.1%. So when you look at that, condos are still clearly under pressure on the price side, even if activity has picked up a little bit. So what does that tell us? To me, it looks like the market that is tightening structurally, but not emotionally. The numbers show less supply and slightly more activity, which normally points towards a stronger market. But the buyer confidence still isn't there fully yet. That's why prices haven't really responded the way they normally would. And it also ties back to what we've talked about the pre-construction and the lack of new supply coming online. If resale inventory starts tightening while construction remains slow, the supply issue could become much more serious over the next couple of years. And that's exactly why the recent government announcements matter. You've got the HST rebate expansion for the new builds only, and you've got the development charges cuts aimed at helping builders get projects off the ground. Those policies are really trying to solve the next phase of a problem, because if we don't build enough now, affordability could become even more difficult later. So right now, the GTA market feels like it's in a transition. Buyers still have the leverage, prices are still softer than last year, but supply is tightening. And if confidence starts to improve, things could shift pretty quickly. One big thing I'll be watching over the next few months is buyer confidence, because that may end up being the deciding factor between a flat market and a strong market in the second half of the year.